The Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. My life, your life, all of us seems to be wrapped up in cycles. Things go up, things go down. And we always think that they're random, that it's just an act of chance or fate why something happens and why it happens again. But the fact is, that isn't the case. Got David Gurwitz, Managing Director of Charles Nenner Research. Charles Nenner, everybody knows him, master technician, former Goldman guy, and he knows how cycles work. David, welcome to the Financial Survival Network.
Nice to meet you, Kerry.
And it's great to have you on. So have I nailed the cycles right? Is that the way they work?
Yes. I have to start by always saying the word cycle comes from the Greek word circle. So what we think of as a repeating pattern, obviously the circle is a pattern we all know, and the idea of cycles as Charles does them, as opposed to most people who say there's a 9-year cycle, there's a 60-year cycle. His idea is best explained by a sports analogy, which, as you and I were just discussing, is certainly not a bad thing to hear, being that you and I were both a little bit of baseball fans. And I say this on my Bloomberg presentation, which I recommend everyone to watch on the site charlesnenner.com. I spoke at Bloomberg like 4 or 5 years ago. I'm getting older, so I don't remember exactly. And I explained how the whole system worked. But basically, if you hit ground balls to Alex Rodriguez on third base, and you hit one every 2 feet, all at the same time, one every 4 feet, one every 9 feet, one every 20 feet, and say, Alex, catch the ball with the glove in the same spot, all of them. How often will all the balls be topping, in essence, or bottoming? And that's kind of the idea that Charles came up with, that if you could find when Apple, which he just called to be topping, how often did it top? Every 3 weeks, every 9 weeks, every 14, whatever the number is based on daily data, then cycles based on weekly data, and cycles based on monthly. Whatever that is, you have all these sine curves. Looks like a bunch of overlaid EKGs. When they're all topping, right, or most, or when they're all bottoming, he just assumes in any data series, whether it's stocks, bonds, commodities, currencies, grains, economic indicators, obviously gold and silver, that's a top, well, that's a bottom. And that's how he came up with this after he was in medical school. And that's a whole fascinating story we talk about else, but he stumbled onto this and eventually became one of Goldman Sachs' secret weapons, and I met him like 10, 11 years ago. And having been trained by Red Auerbach to recognize talent, I knew Red very well years ago. It's a whole other story. When I met Charles, I said to him, he's Dutch, so he didn't quite understand. You remind me of Larry Bird. And he said, who's that? I said, a guy nobody knew about, but they eventually will. And now, thank God, people know who Charles is. And he is a real scientist. He's a medical doctor. He's he was trained by Yitzhak Stern. He was a chess master. He was a black belt. He's a singer. He's a real scientist and a Renaissance man. And he found this set of patterns to give you something to predict direction. That's what cycles only give you, is direction. Level is a whole nother thing, and he does it, very scientifically. And he picks these levels based on the decay in the projector you're shooting a bullet out of a gun, also governs market movements. Then he looks at Elliott wave. And then he looks at a bunch of other indicators and algorithms, MACD and other things other people use. He wants to know what everyone else is looking at. So he basically combines all sorts of algorithms to come up with the most high probability trade in every area of stock, bond, commodity, currency, or grains. And he's right most of the time. And we have a research firm, charlesnenner.com, that has clients all over the world, family offices, hedge funds, investors, individuals, sovereign wealth funds, and we don't manage money, we don't broker. Like I was telling you before, we could be brutally honest. Like,
Yeah,
here's what you should do and not do. I don't care. We're not a broker saying you got to stay in 60-40. Your attitude is in or out.
You got no dog in the show.
Absolutely. We don't force anything unless it all lines up.
Yeah. So cycles, so their validity, I mean, we can't deny them. They rule our lives, whether it's the lunar cycle, the planting, the weather, the seasons, they're all cycles. And if you're married to an excitable female, you know all about cycles, right?
Right. Well, by definition, again, what he does, everybody knows winter, summer, all the things we could predict, and we don't think about it. We just assume winter's coming after the fall and the summer and the spring. That we all take for granted. But the fact that there was something happened in the past that would be affecting now or coming back now, again, we don't have a problem with Halley's Comet. Every 80-some-odd years, when it first came, it flipped everybody out. And then did they write a note 87 years later, check out this comet? It flipped them out. Then eventually they started to get this pattern was coming. And now we just know when it's coming. We don't even get flipped out anymore. But what Charles really added, and other people did it before him, but not to the level that he's combined, was to combine cycles so that maybe all of them have an overlying effect. And that's something that emotionally is very difficult for people to accept, that what things are happening is not free choice. Like it's all set in motion already. I'll give you an example. And the first CNBC appearance on the site, which is really all people have to look at, he called the Dow from 10.8 to go to 14.5 to 14.2. He said, everybody get out. So whatever Greenspan did at the time didn't have any effect. Didn't matter. The cycle said this was what's going to happen. That's just what it is. They think there's a reason why, or as some of the reporters of the New York Times said, there's a great man theory of history. And we don't go that. Like Reagan was, according to Charles, he was elected as cycle bottom, and Carter was elected as cycle top. And it's a deeper question why we as a subconscious would elect a Carter at the time things have to come down. And a Reagan at the time things have to go up. That's another question that we don't have enough time to discuss now. But cycles seem to run the show in everything.
I totally agree with that. And when you're going against the cycle, you're going to get crushed. And when you're going with it, you're going to ride it, just like they say, a rising tide lifts all boats. And as far as where we're at in the cycle now, well, let's just throw one out at you. China's economy, where are they in the cycle?
Well, I'm going to go back 100 years to answer your question.
Okay, and that's
How's that
reasonable.
For a nice answer, right?
I think I definitely agree that you need to, because...
All right, 100 years ago, nobody knows that they were the second biggest economy in the world.
Yeah, I did know that, but...
They fell apart.
Yeah.
So that's probably going to happen again. Now, right now, they're on a rise. And 20 years ago, they certainly weren't. So obviously people forget about that. They see what's in front of their face now.
They can do no wrong right now. They're geniuses.
I mean, they're not falling apart tomorrow. I wouldn't be shorting China for the short, medium term now. But there's a time something's going to happen there is what Charles thinks. But it's okay for a while. But the real question, So that was 100 years ago. China was second biggest economy, and they eventually fell apart and fell to a whole level like you can't even imagine. There was a point when I have a lot of Chinese friends. I actually have a song I wrote, which you can find. I'm a musician also. We were talking about it. I wrote a song called China, and you can Google davidgurwitz.com. You'll see it. And I have a lot of Chinese friends. We'll put a
link up there to the site.
Okay, good.
Okay,
yeah,
how's
fine.
that?
You should. So
We
I wrote a
will.
song called China. It's all based on pentatonic scale. And I went to Bronx High School of Science. I had a lot of Chinese friends. And I'm so friendly with them. They're all math. We're all math guys, right? So all these guys tell me, a lot of them follow Charles because he's very scientific and he's musical, and they're all basketball crazy, so they have a connection with me. And the Chinese, when he was younger, one guy, his family who had cell phones? There was nothing. And now everybody has a cell phone. And what was the GNP then and what it is now? And
I was there 15 years ago, and it was emerging, but it was garbage. I mean, I remember being sprayed by a DDT truck driving down the street and these public privies, and it was disgusting, but you could see where it was heading.
Yeah, I mean, you have a major environmental issue over there.
It's becoming a desert.
Yeah, I don't really see that being solved, and that might catch up at some point. But that's a separate discussion. Let's talk about gold. I know occasionally you think about it.
Yeah, well, I don't think about it much. I mean, it's in the depositories around the world, and it's going to do its thing. And to me, it's an insurance policy, but the cycle will at least rule the short-term and medium-term and long-term prices as well. But we're in a super bull trend for gold and silver, aren't we?
It depends how you define that. And let me answer. Charles took everyone at gold in 1900, several months ago. And he was right. We're getting close to a bottom in gold and silver. So that's the bottom line. Everybody should be looking to buy. But as we said last Sunday, and if anybody writes to the site listening now, I'll send them the research. I'll put them on the research list now. They can trial it and see. He likes to combine the cycles of the underlying metal or oil or nat gas or food with the equities related to it. If they all line up, it's just a higher set of probabilities. So ABX does not confirm the gold and silver bottom. So while we're getting close to a bottom after you took everybody out, we're not quite there to buy unless it gets to certain parameters that you saw and the people write in will see when we send out the research. But he thinks we're going to 2,500. He took everyone out in 1900 2-3 years ago. He went in when nobody wanted to and rode it way up because it's all based on cycles. He doesn't look at the news. 6-8 months ago, obviously, Paulson was buying gold, and we were kind of begging them to get out. They were not a client, and one of their investors is one of our clients, and he knows what we're saying, and he was trying to convince them to get out, and they obviously didn't listen. And gold is the type of thing, for years it was down. It really didn't do well for a long time until relatively last 10 years.
Sure.
So there are cycles in that too. It could go to 10,000, Charles says, if they ever monetize gold. It's unlikely based on what he sees. I should say that. But we are going to go long soon, and he is thinks it gets to 2,500, 2,100 first, but it's not such a major move up as rapidly as a lot of other people think, and that's something they'll see when we get to the research. Silver, similarly. He called it up to 50, 49, wherever it was, and then back down, and that's also bottoming. So that's the big picture on that. But the gold stocks, which we also cover, indicate more lows a little bit out. So that's why when you combine those two things, the underlying core, gold or silver itself, and then the stocks related, when you try and combine them all, it's best to be a little more cautious now. And it's hard for people who've been invested 6-7 years who made a lot. They feel the pain of the loss now, and so that's the hardest thing we find is for those to emotionally accept, at what point they're going to stay in or out of something depending on cycles.
What's he thinking the high in silver is going to be?
50. It'll go back.
It'll go back? You think make a new high? And
that I don't know. That's a very good question. That I don't know. But it'll definitely be a good run up. And copper's down for 5 years. This is what he does. He paints the picture on a set of data on everything. And his attitude is that's the newspaper. Mm-hmm. Look at the data of how I look at it on everything. And then you think about it. I'm just one person showing you data. He doesn't say because the dollar's doing this, gold has to do that. Because he says, I'm not smarter than anybody else in combining them, which I disagree with. I think he is, but he's very modest. So he'll just say, let me show you what I see for stocks. Let me show you what I see for bonds. Let me show you what I see for commodities. What I show you what I see for currencies. Let me show you what I see for the VIX and economic indicators, unemployment and everything, because they're also governed by cycles. And then let me show you the Elliott wave. Let me show you the MACD. Let me show you the target, everything. And you think about it also, because you're the one with the money, investor. And I don't want your money. I just want to advise you on it, as I told you. Like Charles says, if you have money, that's your problem. You want to not lose it. That's my problem.
Right. Return of capital.
Return. I don't even know what the right word is. Protecting is more of a European mindset than an American mindset.
So one other market I just want to cover real quick because it's one I keep close track of in many different levels. Natural gas.
Great. Nat gas.
Okay.
At $6, Charles took everybody out and said it's going to $1.70. Everybody said he was nuts. Not the Nat gas guys. I got a lot of Nat gas guys from the Midwest, from Oklahoma. Go, hell yeah, I remember when it was $1. It could definitely go back there. Yeah. We got towards $1.70. He bought ECA, right? Made a profit, went out again. He just went long ECA, but it might have been stopped out yesterday, I know. But he sees Nat gas going up. So, and crude, he sees an up move now, but eventually heading down towards the end of the year. He's got a target there of 68 after this up move. Part of the nat gas issue people should think about is when nat gas was at $6, the banks were making a lot of loans to the nat gas companies.
Oh, yeah.
And when they went down to $3, they were calling the loans.
Oh, yes. We know that.
So that was forcing a lot of selling of nat gas. But that's all predicted by the cycle.
Well, it's one of my favorite markets is nat gas. Don't invest it. So, David, find out more. We go to
charlesnenner.com. And please write into the site and say you heard you and I talking, and we'll put you on a free look for a while. And we cover everything. It's not just gold. It's anything that is liquid, anything we have data going back several years. A lot of these new gold stocks we can't cover well because there's not enough math to find facts.
Sure. Absolutely, and that's what makes them interesting.
Right. Kerry, it's been a pleasure, and I look forward to the next shot.
You too. We'll talk to you soon.
Okay, great. Bye.
Bye.